Hello, everyone. Today I'm joined by Warren Hui, co-founder of Soul Ventures and general partner at Type 1 Ventures. Where are you dialing in from today, Warren?
I'm currently in the Hong Kong office. It's morning time right now.
Well, awesome. I really appreciate you making the time, especially to do this across the world. So I know everyone is excited for this episode, given your investing background, and I certainly am excited to get to talk to you more. So before we kind of dive in, I would love to sort of just get an understanding of your two roles. So you're a co-founder of Soul Ventures and a general partner at Type 1 Ventures. Could you first describe what is Soul Ventures, what kind of investments you do in terms of sector and stage, and then the same thing for Type 1?
Sure. So Ventures is a venture capital fund. We focus on technology in a general sense. In terms of investment stages, we typically get on the later stage. So we focus on Series A onwards, and we don't do seed and pre-seed. And in terms of our investment mandate, we want to invest in companies that will completely disrupt the daily lives of the masses. And we've been doing this through some of our portfolios, including Reddit, Epic Games, and some newer ones like P-Motion. And I also recently became a general partner at Type 1. Type 1 is a deep tech early stage fund. We focused on bringing civilization to a Type 1 stage. And this is a measurement basically stating in science that if humans can harness like the energy of the planet, humans can become interplanetary, they get closer to like a Type 1 civilization. And obviously, it's a measurement of the progress of civilization. At Type 1, I focus primarily on AI. So I've been investing in companies like OpenAI, Anthropic, to name a few. And I also touched upon robotics as well through the Type 1 funds. So that's a very high level explanation of the two roles I currently have.
Great. And how did you sort of find yourself in the world of venture? I know everyone sort of has a different story in terms of how they found themselves working in the venture capital space. Some people are operators, some people come from the investment background. So kind of curious to hear sort of how you ended up in both roles.
I would say I have probably the most non-traditional route into venture. Taking a step back, early in my childhood, I was extremely into science fiction. So I would watch like Star Wars a lot of times, movies like Terminator, Alien, huge into video games. So the concept of robots, AI, the science progressing humanity was always very fascinating to me. And I guess when I was somewhat like 15 years old, or even slightly earlier than that, I started coding and making websites. So I actually launched my first startup when I was 15. It was basically blogging, microblogging website where users could easily auto translate all the content. So people around the world kind of understand, hey, I'm traveling to Japan. Let's read some blogs about Japan and understand that. And it was a pretty cool concept. I worked on it during my high school days. We raised a seed round and ultimately it failed, but it was a really great experience. And then I went to the States for college. So I went to USC. I studied business and film. I always had sort of like a creative aspect to myself, but I also was really interested into businesses, how businesses were built. And then after college, I went into finance. I did investment banking at Morgan Stanley. I think simply I did that because it was extremely hard to break into venture straight out of college for myself. And I thought I could get some financial know-how and skill sets from being an investment banker at Morgan Stanley. And then did that for 6 years, mainly focused on IPOs and mergers and acquisition and financings. So I kind of had a really good training in how to value companies, how to look at companies when they exit, when they raise capital. And then when I became a vice president at Morgan Stanley, I really wanted to get into venture. I thought it was like, hey, it's time. I applied for a lot of roles. I didn't get any of the roles I really wanted. So I decided to take a really big risk and try and raise VC fund. And so I did that with Soul Ventures. We closed our first fund the year I left Morgan Stanley, and we've been building upon that ever since. Been investing a lot of cool companies, and I've been learning as an investor. And around a year and a half ago, one of my really good friends reached out. He was building Type 1 for a long time. And he said, why don't you come on board and help us invest in AI companies? I know you've been very passionate about that for many years now. So I think that is probably one of the non-traditional routes. I know a lot of people are either operators or founders, or they just started off in venture, different roles and paths.
Yeah, no, that's quite an impressive story. I mean, it's very unique to hear your conviction in wanting to do venture capital and starting your own fund. I don't think that's a super common thing from someone who's never worked in the industry. So definitely very interesting. I now want to change directions and start talking about some of the investments that you've made. You were active in some of the biggest AI deals in the last couple of years in OpenAI, Anthropic. And before we kind of dive into those specific deals, I'm really curious to sort of hear about what that experience was and understanding how you got into those deals and working with people like Sam Altman. I first want to get a sense from you from an overall perspective. Where do you think most of the value is going to accrue in the AI space? Like, I think right now there's a lot of uncertainty. Is it going to be the LLMs, or are those ultimately going to become a commodity just like any other internet piece, and all of the value is going to be sort of in the application layer of the AI world? Curious for your thoughts. I think that will sort of then inform the rest of our conversation going forward.
Yeah, sure. I think for AI, the last 2-3 years, the whole world was very fascinated with large language models. And I think this is given the part that it is the first time that AI has been able to commercialize and be applied in a very generalist sense, meaning that the AI tools can do a wide variety of tasks and help the daily lives of people. And that's why people started to see the value of AI. Obviously, AI has been around for decades. The R&D has been ongoing for many, many years. And I think it's because of the breakthrough of basically the transformer at Google and OpenAI, and them turning it into like consumer usable tools that has sparked the imagination of the masses. So to answer the first part of your question, where would the value ultimately lie? I think large language models today has become a commodity. You're seeing tons and tons of companies coming up with their LLMs, and basically the performance of each one is somewhat quite close. I mean, one model will be really good this iteration, and the next model will beat it by a bit. But I also think the value of first these foundation model companies is that they have proven that they have the best R&D team, and secondly, they have the really good product team to turn the R&D into the actual models. I do not think that LLMs is basically the end for these models. I think there will be new iterations, there'll be new architectures and ideas that will build better models, and you're already seeing this with OpenAI. Ultimately, I think basically a decade from now, we will have maybe, I think, 3 to 10 companies that have the largest foundation models that most of the AI application layer companies, AI agents, and other companies that require the powers of these models and run on them. And those will be the core models that drive a lot of the value from AI. Obviously, as we are expanding the industry, we are starting to see a lot of AI agents, a lot of application layer companies that are building very, very useful tools on top of these models. I think currently it's very hard to say value-wise where the most will come from, because most of the AI companies, even the foundation models, they still haven't locked in their business model. Going back to OpenAI and Anthropic, it's only this year they've launched basically their enterprise business model. How do they actually sell to large corporates that want to adopt their LLMs, their models? How do they actually do those contracts? What is the end-to-end services they provide? And how does the monetization keep going? Parts of it is like a SaaS model. Parts of it is like a service where they have to customize their models for different corporate needs. And I think the business models of that are still being fleshed out, and different companies will figure out a way to monetize the huge amounts of R&D they've been spending developing these models for many years. And then if you go moving back onto like the agents and the application layer, people are figuring out, how do I actually build a sticky product? Because obviously there has to be a moat. If you're building on top of other people's technology and models, what makes my product sticky enough and defensible enough that someone else doesn't come along and just build the same thing, tweak it a bit, and sell it back to my customer base? I think that is even more early in terms of developing the business models, but I see a lot of promise. And ultimately, day to day, I think in the end, most people will be just using AI agents and application layers like they use apps on the iPhone today.
If that's the case, right, that we believe that LLMs are going to become sort of a commodity, that feels, at least to me as an outsider, very similar to the role today that a lot of the cloud hyperscalers play in terms of providing this infrastructure backbone that then everybody else relies on to then go ahead and do all their different functions. Given the distribution, the capital advantage that Amazon, Google, Microsoft already have, and their ability to hire and develop their own advanced research teams, what is the right to win, I guess, or like the advantage that an OpenAI or Anthropic has in that space to actually become maybe like the dominant LLM that a lot of people are going to build future applications and services off of?
So I think basically the advantages that OpenAI and Anthropic have was that they had the best product team to launch consumer usable products. Because if you take a step back like 5 to 10 years ago, Google basically had more than half of the world's best R&D in AI. They had DeepMind. They basically invented the architecture like Transformer that powers basically all the LLMs today. And I simply think that Google and Anthropic formed a partnership because Anthropic were building models faster and deploying them more user friendly. And Google felt like it was falling behind and they needed basically a place in the LLM world where they could be number one or number two. So going back to your question, yes, the tech companies had the best resources. I just think they moved slower than what they could have done simply because they had the burden of their traditional business. I mean, Google had a huge search business. And if you think about AI today, it can basically supplant and probably make it even better with AI search or AI tools. If I could talk to an AI that was smart enough to answer all my questions, do I really need to go in your browser and search stuff? The answer is probably no. I simply think the incumbents in the AI space, like the top models like OpenAI, Anthropic, they simply took the R&D from the bigger tech companies and they moved faster and they just deployed it. And the consumers have already latched on and started using them daily as the go-to AI tools. To win in the space, obviously, as an LLM, you need a lot of capital because the R&D to compute is like hundreds of millions of dollars. That's probably the first barrier of entry. I think it's really hard for new companies to come and say, hey, I want to build an LLM because these big players have already raised hundreds of millions of dollars. And simply to put, they also have the best tech hyperscaler partners, as you said. OpenAI with Microsoft, Anthropic with Google and Amazon, and the list goes on. So they basically have all the right ingredients with compute, with R&D, the best product teams, and they can keep on making the best models and products that both consumers use, enterprises use. Eventually, all the ecosystems will be built upon them.
Sure. That's, I think, a really great answer. In terms of picking the winners of the application layer and sort of like understanding who's building the best services on top of AI today, it feels like a lot of the businesses, to your point earlier around defensibility or sort of the moat, are just like basically a ChatGPT wrapper that does something slightly more specific than ChatGPT, but it was ultimately an API that calls back to ChatGPT or other large language models. How do you start to understand, okay, is this actually a sticky product that would actually become even better if the models got 4, 5, 10 times better themselves?
I've been looking at a lot of these application layer AI agent companies, and I have that question every day when I ask myself, would I invest in this? Does this thing survive 10 years down the line? So I'll give you a very good example. I'm a big user of Perplexity. I think it's a great AI search tool. You type in your questions, Perplexity gives you a lot of good answers. But back to your point, it's basically a wrapper around OpenAI, Anthropic, and the other models. So my question was always for Perplexity, since OpenAI came up with ChatGPT search, Microsoft and Google are coming up with AI search, how does Perplexity actually like survive? And to be honest, I don't have an answer right now. I'm still looking into it. But I think the way for these application layers to survive is they have to have unique data sets and unique data that can ultimately power their product. And also they will benefit from calling back onto the models. So I think some of the more interesting application layer stuff will be in niche industries. Let me give you an example. I actually think a lot of the AI agents and companies in the healthcare space will probably have a lot of advantage of being true companies that can survive, can fundraise, and continue to have their moat. Because the big models, they will keep building better models. They will keep coming up with new products that are kind of organic to their business. But they would never go into a very niche field, let's say surgery or day-to-day healthcare and seeing doctors. I mean, an AI agent that could train basically on a network of hospitals, medical data of patients, that would be very useful because then the AI will be able to basically communicate with the users, maybe ask them questions to identify symptoms of their illness, and maybe speed up the bureaucracy that happens in hospitals. So I ultimately think that data sets that are unique and basically a know-how of the industry is what would set a lot of these application layers apart from their competitors and also getting replicated going forward.
Sure. You mentioned sort of the healthcare application. There's a lot of talk around sort of like the use case of AI and software development and fintech in terms of risk measurement. Is there a particular vertical right now that you're particularly excited about in terms of AI-enabled applications?
So I think the lowest hanging fruit right now is probably AI agents that can do coding. You're seeing probably 5 to 10 really good companies popping up and automating basically the end-to-end process of like a engineer coming up with code, checking it, and deploying code. I simply think that coding has always been such a huge need for all types of businesses and companies. And I think AI is probably currently at this stage. It's in the best spot to build out AI agents that can code very efficiently and basically help engineers be much more efficient in the way they deploy their code. That would probably be the lowest hanging fruit, both in terms of investing in a startup and also seeing these companies grow extremely fast.
Sure. And then you mentioned you have the second role now, Type 1 Ventures. In addition to looking at the AI space, robotics has become another area, for example, within the deep tech world that you're quite excited about. Robotics is, on one hand, feels like something that it's been always right around the corner in terms of something that's going to be useful. I think a lot of us have those images from sci-fi movies from when we were kids of robots walking around and doing a lot of general tasks. And that image in reality has always felt a lot further away. So what are sort of the recent advancements in robotics that makes you particularly excited about the industry? And maybe what is also the confluence of AI and robotics? And is that actually something that's going to lead to sort of the next generation of robotics?
Yeah, so I think because of how good the LLMs have become in general purpose thinking, I always thought that for humanoid robots and robots to truly be commercial friendly and massively deployed, they have to be smart enough for general purpose, meaning that the model that runs these robots have to basically understand a lot of different data sets. If you look at LLMs, they only process like audio, visual images, and text. That's good, but that's not good enough for robots. Robots have to basically understand the visual and the 3D space that is around them. Like humans, most of the data we gather is actually from vision, from hearing, from smell. And that is the type of data that robots should eventually be able to process to be a really efficient general purpose robot. And by general purpose, I mean, you have this humanoid robot at your home. You can tell it to do a multitude of different tasks, and it'll probably be able to do it. And if it's not able to do it, you should be able to teach it visually. I invested in this company called 1X. They make humanoid robots. And the first demo we had with the humanoid was this robot currently does not know how to make coffee. So the person made coffee in front of it. And after the robot watching it, the person makes coffee, I think 2-3 times. It started to replicate the motion, understand what the coffee making machine is, what different buttons are. And it made coffee for the first time. And then after that, we basically took away the coffee machine. We replaced it with another coffee machine and said, hey, go make coffee. And then the robot struggled at first, but eventually it had some reasoning. It kind of saw that the buttons were in different places. The cup had to be put in a different way and it made coffee again. So I think we are currently at the trajectory where the next iteration of models that power robots is probably 2 to 3 years out, I would say. And these are not LLMs. These would be new types of models that kind of have new architectures, processing the 3D space data sets that it's really actually hard to collect. So I think one of the reasons why we're still not there yet is because companies have not figured out how to collect massive amounts of 3D data that are needed to train these new types of, I would call them like world models of 3D space models that can power robots. And I think companies like NVIDIA, companies like OpenAI, Figure, they're all working on this problem. I think actually that's 1 to 2 years out from, a good general purpose robot. And obviously I'm the most bullish on Tesla coming out with Optimus because I think they basically have all the ingredients to make a really, really good robot. And the only question is, do they have the R&D team to make the model to power like Optimus?
Yeah, I was going to ask, it feels like there's a lot of overlap between autonomous vehicles and general robotics in terms of the processing of 3D spaces and visual data. Has there sort of been like a merging of the minds in those two spaces in terms of taking a lot of the insights that have been developed around autonomous driving, say from Waymo, and applied to the robotic space?
Yeah, definitely. So I think Elon is probably the best position to do this. So if you look at the Elon ecosystem. He has Tesla, which has been collecting the most 3D space data through his like Tesla cars and fleets. He's building on the Optimus, so obviously he's trading a lot of the model and his robotics on this data set. Obviously, he also just launched XAI. And I assume that XAI would probably work on a model that powers robotics, given that he has such good data sets. And then to take it a step further, he has also a company called Neuralink, which is chips in the brain that measure your neural activity. And basically it translates that neural activity to actual data. So you can basically control computers, interact with electronics without even touching them or speaking. So given all the data sets that Elon has, I think he's very well positioned to take what he learned from Tesla auto driving cars and then implementing that into his Optimus robots. I think a lot of other companies would try and replicate the data and the learning they had from autonomous driving into robotics. And I think there's like a natural linkage of the data sets that are needed in that space.
I guess the next question I have is really around founders and evaluating these deals, because obviously these are highly technical sort of products that these people are working on. And my question is, A, do you always think it's important to have a very technical founder on the team? And B, how did you, especially in the beginning of your venture career, start developing the muscle of, okay, this is a founder who has what it takes to become the next Elon, let's say, and actually like really build a sort of like generational business?
Back to your question, I think the answer is yes. I think at least one of the founders has to be technical if you are building a deep tech company. So deep tech, I would say, is AI, robotics, space, any sort of technology that needs a lot of R&D and capital to build up the first initial product. But I think Mark Andreessen said this was, what you want is you want a founder that's extremely technical, knows the R&D, and then you want another founder that's probably like the product entrepreneur person. They can take this R&D, they can take this research and technology and translate it to a product that the market is willing to pay money for and monetize. And I think for most really, really good deep tech companies, either the founder is wearing both hats or you have two founders that separate these roles really, really well. When we look at founders, obviously, if you're going to invest in deep tech, I think the first ask is one of the founders technical enough to deliver on the engineering, on the execution, and the R&D to actually come up with a product from such a complex or such a frontier idea that they have. And if the answer is yes, then we go look at, does the other founders or the existing founder also have the capability as an entrepreneur to take this extreme frontier technology and commercialize it? And if the answer is a strong yes to both of these, then you probably have a really, really good startup that you want to put as much capital as possible in every stage, especially in the early cycles when they need a lot of capital for R&D.
And in terms of your own evaluation, obviously you mentioned in the beginning you have this background in software engineering, developing your own website, but you then went the more traditional business route post undergrad in terms of working at an investment bank. How did you kind of develop, I guess, the intuition around the read on these technical people? Is this a good quality product, given you don't necessarily have sort of that more sort of product-oriented background post-undergrad?
Actually, I'm a very non-technical, I would say, venture capitalist. So I rely a lot on my research team, my analysts, who are probably more technical than me, to look at these companies and give me basically the feedback. With the research team and the analysts, we would look at the company, look at the R&D and the founders, and then we will evaluate them. And I think the good thing is for most of the companies we look at, we usually have a bucket of companies that are similar in nature. So we can basically compare the research and the development that's been coming out of all these like competitors and determine sort of, hey, this company A is really far in terms of this aspect of the R&D, but company B may be further in this type. And we basically try to piece the puzzle and see who's going to get there faster or who has an edge in terms of the products they're ultimately wanting to build. And I think for myself, it's always been, I'm always very curious. I talk to a lot of very technical people. I listen to a lot of research podcasts on topics that I really want to understand well a lot. And I read a lot of books just to keep myself updates in a space that's evolving so fast. My tip to anyone that wants to break into venture, you have to always be curious. You have to be very humble in terms of not thinking that you're the smartest, because you're definitely not the smartest. The smartest people are probably like the founders that are building the next unicorns or the next big things. If you can process all this information and come back to your investment thesis top down, then you probably can make some really good investments.
Sure. In terms of, at the end of the day, too, venture is you're in the business of selling money, which is actually maybe one of the hardest things to sell, given that everyone's dollars are just as green as the other. So I'm curious, in the OpenAI Anthropic cases, how did you sort of sell yourself and Type 1 and Soul Ventures to get allocations in those probably really hot deals? What was sort of the selling point that you brought to win allocations in those deals?
Yeah, I think the most important thing is obviously to believe in a company as early as possible first. I think founders really appreciate it when you are supporting them or believing in their vision before most of the other venture capital funds or most other investors are even interested. And then secondly, I think it's always like, what value can you bring to each founder? Right? So an example of this is some of the founders, especially in AI, comes to OpenAI and Anthropic. They are trying to expand their business globally very fast. Probably the biggest edge you could have as a VC is, hey, I'm actually very well connected in Asia, for example, Japan, Singapore. Do you want to talk to the governments there that are actively pushing for AI to be deployed within all the large corporates? So if you can basically know the strategy of these founders and align yourself and accelerate basically or help them in their strategies, they would really appreciate it. Then your dollars would be much more meaningful than pure dollars for their fundraisers. Other ways you could probably help founders is, hey, I know you want to break into this field in terms of customers. Maybe some of my large LPs are customers in this sector that you want to kind of pitch. So if you could bring them really big customers that translates to ARR very quickly, the founders will also appreciate it. As like a venture capitalist, you're always basically just putting on your hat and seeing, how can I help this founder get to the next milestone, the next major point in the company faster by helping them out strategically? And if you're able to provide this value, then a lot of the times the founders are definitely happy to let you invest dollars in rounds, especially when the rounds are very hot and very contested and everyone just has so much dollars to throw at them. They'll probably look for people that generally want to put their time in, spend time with the founders, and just help them grow strategically. And I feel like that is a really good recipe to winning founders. Basically, the earlier you can do that, the more opportunities you have to invest with that founder, I feel.
Yeah. How do you think about the current state of the AI market in terms of a valuation perspective? I mean, VC in general has been suffering since the zero interest rate period in the US in terms of downward pressure on valuations, but it seems like AI has been largely protected from this pressure. And just in October 2024, OpenAI raised a $6.6 billion venture deal, and valuing it at close to $160 billion. For a company that just started generating revenue a couple months ago, a year and a half ago now probably, that is quite a large turnaround and a large funding round. Do you think that there will ultimately be a bubble that bursts, or are these companies in sort of the new AI space so big and can take such a big part of the economic value that the valuations actually are legit?
So my short answer is, I think in the short to medium term, I do feel AI valuations are overhyped. But I think in the long term, AI valuations are underhyped. So I'll explain that. If you look at AI as a technical breakthrough in technology, I see it as a super cycle that's kind of close to the internet age, like the internet breakthrough, where you have a technology that is so disruptive and so important that over the span of 30 years, it transforms global economies. It transformed the ways that every person lives their life. Think about it. Before the internet, people were living their lives very differently to what we're doing today. I mean, we're on our smartphones all day, browsing Instagram, looking at websites, YouTube. The behavior of every one of us has changed dramatically. I remember being young, and when the internet wasn't that prominent, I would look at information. I would probably be reading more books and doing things differently. And I see AI as a technology that will probably be even more disruptive than the internet in the next 20, 30 years. I see there's so much value in the next 10 to 20 years that the companies that are going to be the leaders in the space are going to be trillions of dollars of value. So what you see VCs are, they are basically scrambling to pick basically the companies that they think are going to come out on top.
If I was the skeptic, though, for me, internet provided such a transformation in terms of distribution. Now, as a consumer, I'm able to access websites across the world, buy products from across the world, bring things to me in a new way that was completely different than any other previous innovation. For me, AI, though, is doing a lot of the things we do today better, quicker, easier. But there's not this sense of I'm fundamentally changing the experience, right? Like Instagram with AI that has a better algorithm to show me videos. Yes, that's an incremental improvement on Instagram was before, but the fundamental distribution and product that I am consuming is still largely the same. Do you think that AI will then lead to a whole new way of people consume, or how would you sort of respond to a criticism along that line?
If you go back to my point earlier in the interview, we are at the inception of the AI age. We're currently only playing around with one idea, which was transformer that became LLMs. So with this one idea in AI, we've already shown that there's so many ways you could use it, extract value, and what I'm saying is in the next 10 years, there'll probably be, I would say, 5 to 10 major breakthroughs in AI. And these would be new types of models that completely change the way we interact with information, process information, or even create stuff. And I would say in 5 to 10 years times, you have AI that's so powerful that they could help you, create, brainstorm, come up with ideas, automate the stuff you do at work. And that is where I think the true value unlock begins. Right now, I think we are just basically seeing a tool that can do stuff, as you said, maybe like 10 to 20% faster or more efficient. But what I'm saying is in 5 to 10 years, when we have these new breakthroughs in models that can do reasoning, that can do critical thinking, and eventually do human intelligence like AGI or even super intelligence, that would be the complete game changer for the human race. The best example I would have going back to science fiction is think about it. If you were a scientist and you were trying to do like a huge breakthrough in science, let's think of a very far-fetched stuff like light speed travel. You would probably need centuries and centuries of R&D and incremental breakthroughs to get to light speed travel. But if you had an AI that had super human intelligence that could assist you, or a group of AI agents that had that capability, you could probably reach light speed travel in 1/10, 1/5, even 1/100th of the time that you need. What I'm saying is once we reach to a point where AI becomes more critical thinking, has better reasoning capabilities, and even probably become more creative, then there's a lot of different things that we can achieve with AI. And I think it's an accelerating momentum for the space. And I'm really excited to see where we are 5 years, where we are in 10 years.
We're now winding down to the final portion of the episode. I just kind of want to get some overall sense from you. You already kind of given us your keys maybe to getting into venture, which is a common question that I asked in terms of being really curious and sort of engaged and just trying it, frankly. But a closing thought that I would like to get from you is, of all these trends that are happening in the world in terms of AI, robotics, what is the one that you're particularly most excited about, say, in the next 12 to 18 months in the short term?
I think I'm currently the most excited about models becoming able to reason for the first time. If you look at OpenAI's O1, now you have a model that basically can correct itself, that has a bit of critical thinking and thinks about problems slightly deeper. I'm just very excited to see like how each company takes the LLM to the next level, the level where it has a bit of reasoning, has a bit of critical thinking, and basically processes your information more smartly. And I think in the next 12 months, you're going to see all the top AI companies come up with their answer of what is kind of next for LLMs. We don't just want to type information and answer straight away. We probably want some of these models to help us through a thought process or help us with more complicated tasks. And I think basically in 12 to 18 months, we're going to have models that are so much more powerful and more impressive than what we are used to today. And that will probably be another value unlock for both work and for leisure that we're going to see across the board. And that's basically what I'm basically through all of the companies, also looking for other companies that are working on those incremental improvements to the models that we're used to today.
Yeah, fascinating. I think to your point, we're on the precipice of one of the biggest technological changes of our generation. So it's a very exciting time to be alive, if not sometimes a little bit scary. I really enjoyed this episode, Warren. I thought it was super interesting hearing more about your thoughts in the AI space. I think a lot of people have general understandings of what it is and where value is being accrued, but it was great to hear from you as an expert in the field of trying to understand a little at its second degree level of what's actually happening in the space. So I really appreciate your time and I really enjoyed doing this episode.
Thanks a lot for your time and interview. I would definitely say I'm not expert. I'm just a learning venture capitalist.
We've done a little more learning than maybe some of us have, so definitely appreciate the insight. So thank you again.
Yep. lot for your time. Appreciate it.